MSTR crashed 73%, from $543 to $158. And if you think that's bad, wait until you hear what's coming next. See, most people are looking at this drop and thinking, okay, it's oversold, time to buy the dip. But what they don't realize is that MSTR isn't just a stock. It's a leveraged Bitcoin bet with $8.2 billion in debt, margin pressure, and institutional investors quietly heading for the exits. BlackRock dumping shares, Wall Street backing away. And here's the thing, I warned you this was coming. Back in September 2024, I made a video breaking down why MSTR was a house of cards. I showed you the pattern, the risk, the exact historical parallel to the Nifty 50 bubble. And now we're watching it collapse in real time. But the crash isn't over. Because when you look at the debt maturities, the Bitcoin correlation, and the forced liquidation scenarios, there's a very real chance MSTR could drop another 50% from here. I know that sounds insane, but that's exactly what happened to Luna. That's what happened to the dot-com darlings, and it's happening again. So over the next 8 minutes, I'm going to walk you through what's next, and how to protect yourself before it gets worse. Act 1. The debt recap plus the mystery. Now look, MSTR's debt problem is real. $8.2 billion in convertible bonds, with maturities starting in 2027. When Bitcoin was at $100,000, this looked manageable. But at today's prices, that margin for error is shrinking fast. If you want the full breakdown on how MSTR's debt structure works and why it's a ticking time bomb, I covered that in detail in my previous video, link in the description. But here's the thing, the debt doesn't fully explain this crash. Bitcoin dropped 30% from its peak. MSTR dropped 73%. That's not normal leverage behavior. That's not just a debt concern. That's the market pricing in something much bigger. And Wall Street? They've known about it for 3 months. They're just not telling you. Act 2. The Binance time bomb. On October 11th, 2024, something happened that broke the Bitcoin market, and most people still don't understand what it means. Binance, the world's largest crypto exchange, had a glitch. Traders got liquidated, positions were closed, millions vanished. And then, they rolled back the data. They hit rewind. They literally rewrote the K-lines, the price history, like none of it ever happened. Now, if you're thinking, okay, that's shady, but what does that have to do with MSTR? Everything. Because that October 11th incident wasn't just a bug, it was a breach of Binance's deferred prosecution agreement with the US Department of Justice. In 2023, Binance paid a $4.3 billion fine and accepted a 3-year compliance monitoring period. The deal was simple. Behave, or all your previous crimes come back to haunt you. Rolling back trades? That's not compliance. That's market manipulation. That's violating the agreement. And when you breach a deferred prosecution agreement, you don't just get another fine, you get prosecuted for everything. Here's what Cathie Wood said on Fox News just days ago. She blamed Bitcoin being stuck at $83,000 on the aftermath of the 10.11 incident. Most people thought she was just complaining about volatility, but she wasn't. She was handing the Trump administration a loaded gun. Because right now, Bitcoin should be trading at $145,000 based on institutional demand, ETF inflows, and halving cycle models. Instead, it's at $83,000. That $60,000 gap, that's the trust discount. That's what happens when institutions know an exchange can rewrite reality with God mode. Why would BlackRock put billions into Bitcoin when Binance, which handles 40% of global crypto trading volume, can just roll back trades whenever they want? They won't, and they haven't. But here's where it gets interesting. Wall Street isn't just sitting around complaining, they're preparing for surgery. The evidence. In the last 90 days, 4 things happened that nobody's connecting. 1. BlackRock quietly updated IBIT's custody terms. They added a clause about secondary emergency custody and liquidity routing with BNY Mellon as backup. That clause didn't exist before. Why would the world's largest asset manager prepare for total failure of primary counterparty unless they knew something was coming? 2. CME Bitcoin futures open interest just surpassed Binance's for the first time since 2021. Wall Street just took back global Bitcoin pricing power. Binance is no longer too big to fail. 3. Coinbase raised $2 billion in convertible bonds in December, in a bear market, when they don't need to expand. Industry insiders say this is a rescue fund, approved by regulators, to absorb the tsunami of sell orders when Binance gets shut down. 4. Circle just connected USDC directly to the Federal Reserve settlement system last month. They're replacing USDT with USDC. They're cutting Binance's blood supply before they cut out the tumor. This isn't conspiracy theory. This is extracorporeal circulation. They're building a backup system so the market doesn't crash to $20,000 when they pull Binance's plug. So, what does this have to do with MSTR? Everything. MSTR dropped 73% because institutions are pricing in the Binance liquidation event. They know it's coming. They know Bitcoin will test $65,000 when it happens. And at $65,000 Bitcoin, with MSTR's debt load and leverage, we're looking at MSTR under $100. Maybe lower. That's why BlackRock is dumping. That's why insiders aren't buying. They're waiting for the bottom. Now here's the twist. Long term, this is actually bullish. Once Binance is dealt with, whether through prosecution, forced sale to US entities, or Section 311 sanctions, that $60,000 trust discount disappears. Bitcoin goes to $145,000 plus. MSTR could 10 times from current levels. But, and this is critical, only if MSTR survives the crash. Because that debt we talked about earlier, at $65,000 Bitcoin with forced liquidations and margin calls, that debt becomes a noose. So MSTR is trapped between two disasters, their own internal leverage risk and the external Binance systemic event that Wall Street is positioning for right now. Here's what you need to watch. 1. Department of Justice announcements. If you see headlines about Binance indictments, Section 311 sanctions, or DPA violations, that's your 48-hour warning. 2. Bitcoin's $70,000 level. If BTC breaks and holds below $70,000 for more than a week, institutions will capitulate. MSTR goes with it. 3. MSTR's convertible bond prices. If those bonds drop below 50 cents on the dollar, equity is toast. If you're holding MSTR right now, you're not investing. You're gambling that they survive the next 60 to 90 days. Could they? Absolutely. Bitcoin could rally. Binance could somehow avoid prosecution. MSTR could refinance. But the smart money, BlackRock, Fidelity, the institutions, they're not betting on maybes. They're positioning for the worst. My previous video warned you about MSTR's debt. This video is warning you about the catalyst that triggers it. The debt is the gun, Binance is the trigger, and Wall Street is already wearing earplugs. Look, I'm not telling you to sell. I'm not telling you to buy. I'm telling you what the institutions know that retail investors don't. If you found this valuable, hit that subscribe button. I break down the patterns, the hidden mechanics, and the systemic risks that Wall Street doesn't want you to see. Because in this market, information asymmetry is the difference between buying the dip and catching a falling knife. Stay sharp and get your coins off exchanges. I'll see you in the next one.